Hey everyone, welcome back to Upside Down Data. So Joe put out a very prescient video yesterday talking about how some short-term caution in the market might be warranted, and lo and behold, here we are, Bitcoin down 7.6% in a single day, clearing right through its 200-week moving average, really not respecting that level at all, and falling down pretty precipitously down to the downside. So losing the 200-week moving average in and of itself is not great, right? That was one of the things we talked about, that being able to reestablish that as support might have been a sign that a continuation off in a more bullish direction could be possible. But having lost that level so decisively, it seems like re-entering this range at the very least is going to happen. And it's also possible that further downside or new lows could come into view or into the horizon in not too long. And there's other reasons why we might want to be concerned right now. So Joe mentioned this yesterday as well, but I just want to highlight it again because I do think that this is an important thing to consider. We have now also, assuming we close down here, lost the market direction classifier critical level. That's one of our models. I'm going to pull that up here. Let's go ahead and talk about what that is looking at now. Okay, so here is the MDC, the market direction classifier. If you're not familiar, this is a model we have here on the channel that tries to classify basically trend. It's basically a trend indicator. So it looks at the asset's price history, and then it creates a critical level, that's this yellow line, that the price is above it, that's bullish, and if it's below it, then that is bearish. And what you can see is that we've been largely in a bearish disposition, with a little blip back up here in March, and we had jumped up again above it again here in this rally that we've been seeing. And you'll notice, we haven't closed yet, so this hasn't turned red yet, but we've now cleared below the MDC critical level, and that level right now is 21,800 roughly. So this is an important level from the model's perspective. It basically thinks that if we close below this, it's going to think that a bearish disposition on the market becomes more reasonable. And we can see that oftentimes when the MDC flips bearish, downside follows. It might not be a huge amount of downside, maybe that's what we're all hoping, but it can be quite a bit of downside that will follow. And so that would be a concerning sign if that happened. Now, it is important to note that, if you're right around the critical level, so for example, these cases back here might be an example, then that's not necessarily all that diagnostic. If we close, right around the critical level, not a huge deal. And so if we were to close, right here and just kind of spend time down here, that's not maybe as big of a deal as if we close considerably lower or, next day fall even further below. That would be maybe a more diagnostic sign that downside is to follow, because you can see that once you start really clearing below, downside does follow even if a reversal of the upside comes after. But then, of course, more recently, what we've been seeing is every time we close red, it's just been a huge move to the downside, just really nasty. So that's where I think that if we do close in the red, my base case will be going down, maybe having to retest the bottom of this range before we can start moving back up to the upside. So a concerning sign here, something to be watching as this daily close comes in. If we can rally back up above the critical level, then the model would actually think that a bullish disposition continues to be reasonable. Now, another model I wanted to talk about here was the Trend Confidence Indicator, or TCI, which gives a slightly different perspective on what is going on. So this is another trend indicator we have on the channel, and what's trying to really quantify here is how confident can we be in a given trend that's occurring. So higher values being above zero is more confidence in an uptrend, lower values below zero are more confidence in a downtrend, or that a downtrend is likely to follow. So the TCI often acts as a leading indicator. You can see that happened back here in the spring of 21, really be this leading indicator into this big crash here, and also a leading indicator to the upside coming out of the summer. And you can see what we've been more recently is we've been, up through these levels, the TCI have been quite confident of an uptrend. Now, I had put out a video, not too long ago, where at the time I thought a bullish disposition on Bitcoin remained reasonable. Obviously, I'm going to eat my hat on that one. Clearly, bearishness seems to be taking over. But one of the things that I mentioned in that video was that there was one possible sign of weakness that the TCI was showing us, in that it looked like it might be starting to roll over and move back to the downside. Now, we are still above the TCI's critical level. So just like the MDC, the TCI has a critical level. That's 20,600. So the TCI still thinks that this looks more like an uptrend than a downtrend, but it's certainly a lot less confident in this uptrend than it was just a few short days ago. Really, this big wick to the downside, or this big candle to the downside so far, has very much shaken its confidence in our ability to continue this uptrend. and should we close below the critical level, it will flip bearish as well. And so kind of the general outlook then that I have for Bitcoin, and frankly the rest of the crypto market, I think ETH is probably not going to necessarily be able to defy gravity through this whole thing, is that we're re-entering, at least for the short term, a risk-off type of sentiment across the market. The stock market's also showing signs of rolling over here, and the dollar, as Joe mentioned yesterday, is starting to really rally. So I think some caution in the short term is definitely reasonable. I think for this rally we've seen, more than likely than not, we've kind of spent the gas on it. Now, of course, if Bitcoin can close above the MDC critical level, then I might still have a little bit more hope of our ability to maybe continue the rally and set in, what could possibly just be a higher low up here. But certainly if we slice down, we close below this, and certainly if we start trading below this, the next day or two after that, I'm going to be very much concerned and think that lower prices are probably the more realistic place that we're going. So I just wanted to make this video because we have seen such a drastic move and just give an update of what our models are thinking. And certainly, should we go then, beyond the MDC and close below the TCI's critical level, there's very little to be bullish about in those scenarios. And that's where I would think that further downside is very reasonable. So not financial advice, just what I'm seeing in the data right now. All right, if you like the content, remember to subscribe to the channel, give the video a like and follow us on Twitter. We'll have updates, better indicators, and more over there.